Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Hi, Chloe James here for Banking Uncovered, joined by my co-host Charles Green over in London. I should say I'm speaking to you from Australia, and we are thrilled to have Brett King on the show. Probably needs no introduction, but Brett's joining us from Bangkok. So we really are bringing you a global show today, which I'm extremely excited about. Brett, obviously, huge person within the fintech and banking and futurist world, founder of Moven, host of Breaking Banks, an amazing keynote speaker. If you've never seen him speak, you should. Investor, advisor, author of many books, and I know he's got a new one coming out. Friend, he attended my wedding. Brett, welcome to the show.
Yeah, it was an awesome wedding too.
We don't need to talk about that today, but anyway, Brett and I go way back, and as he does with Charlie as well. So great to have you here, and thanks for joining.
It's great to hang out with you guys. Like, I would just hang out with you just to chat, but you know, we can do a podcast as well. That's cool.
Love it. Over to you, Charlie.
Yeah, Brett, welcome to the show. I was just thinking, I think it was like back in 2008, 2009, maybe 2009, that when you were promoting your first book and you came and spoke at our first conference in Sydney, Australia, talking about breaking banks. But
boy, that was like 2010.
Yeah, it would have been. I'm just thinking in my head.
That was just after Bank 2 came out. Like that was, that's how long we go back. You know, that's 14 years ago.
Long time.
But yeah, and that kind of 14 years I wanted to talk to you about, because obviously back then you were very much, it felt like a lone voice talking about the future of the industry. Fintech wasn't even a word. There were no neobanks. There were no digital disruptors.
Amen.
And here we are. I just saw
That's why I'm a futurist, Charlie.
Sorry?
That's what makes me a futurist. You know, like I was talking about this stuff.
You must be feeling very vindicated now, because I just saw yesterday that Monzo just hit 10 million customers. Revolut just got a banking license. Oak North, as well as being profitable, just did a dividend distribution. So it kindly feels like the winners amongst all the myriad of fintechs are starting to emerge and starting to be pretty serious players in their own rights now within the banking community in pretty much every market that we're looking at.
Well, look at Nubank. It's the largest bank outside of Asia. You know, it's a neo. Revolut has 40 million customers, which is more than HSBC's retail practice globally, which has 38 million. Obviously, you mentioned Monzo. You know, if you look back just a few years ago, what was the industry saying? They're never going to make money. They're never going to be profitable. They're never going to be as good at managing risk as incumbents are. And the only reason they're growing at the rate they are is because they're so small. So they were some of the objections to this concept that challenger banks were sort of the next generation of banking. But all of the fastest growing banks in the world today are digital banks. And I can give you the stats on this. You take the top 20 fintechs in the world. Now, obviously, this includes some 800-pound gorillas like Alipay and, you know, Tencent, WeChat Pay, and so forth. But you take those top 10 fintechs in the world, and they have 4 billion customers between them. You take the top 20 retail banks in the world, and it's 2.8 billion. You know, you look at their growth over the last 5 years for the challenger banks and the wallets, and their growth is a compound annual growth rate of 15% for revenue. And over the last 5 years, they've grown 200% in terms of customers. Traditional incumbents, 3% annual revenue growth, and about the same, about 15% growth in terms of customer numbers. So, you know, if you look at the dynamic, challenger banks and the wallet ecosystems already represent the majority of the population globally, and they're still growing. You know, if you look at Revolut and Monzo and Nubank, you know, they're still growing at a clip, even though, Nubank in Brazil, LATAM, is now twice the size of Itaú, which is, you know, was traditionally the largest bank in Latin America. And their market cap is obviously now exceeded any other bank in LATAM. So, you know, everywhere you look now, whether it's in China, whether it's in Latin America, whether it's in the EU, you know, challenger banks are part of the fabric of of this system now. But in terms of, looking 10 years in the future, and you are going to ask the question, well, who's going to be the biggest bank in the world in 10 years? And the answer would seem to be pretty clear. It's going to be one of these new entrants, because not only have they got the digital scaling problem cracked, but they're also most likely to be able to integrate artificial intelligence to really differentiate their product because of their tech stack, And so, this is a new world.
Yeah, no, it's really interesting. So, just looking at the US, so in the US, we've got our macro monitor data set, which goes right back to 1982. So talking to 5,000 US households about their entire balance sheet, building it from the ground up for the last almost 50 years. And just looking at the data there, it's really interesting, because if you look at market share data, you've got Bank of America, you've got Wells, you've got Chase. But then if you just cut it on the last 2 years and go, okay, who's winning new main bank customers in the last 2 years? Chime has more than Bank of America and Wells Fargo together. And you look at the top three, it's Chime, it's SoFi, it's Synchrony. They're the ones winning all the customers over the next 2 years. And the really interesting thing is, obviously, consumers now, they're looking for digital solutions. That means they're not so wedded to this concept of a branch or a local branch.
Absolutely.
And needing to go to a branch. And that has, it has massive implications for branches globally. But in the US, where you have so many regional and local banks, like going right down to banks that only have 4 or 5 branches, that's going to have a massive impact on them if that entire branch concept moves, disappears as a point of competitive advantage. Now, I know you've got a book coming out on that, so I'd love to get your thoughts on that, but also your thoughts on, if you're sitting not on your side of the world, on the futurist fintech digital side of the world, if you're sitting back at Bank of America, HSBC, Itaú, one of these banks, and you're looking at this, what can you do? What should you be focusing on?
Well, I think what Chase has done is interesting. It's very interesting. In the US right now, all of the, pro industry guys are talking about the fact that Chase is, still, doubling down on branches in some of their strategic locations. But the reality is that, overall Chase has seen about a 15% reduction in their total branch numbers, but they've been reorganizing, so they've been taking larger branch footprints and moving them into smaller branch footprints with digital support and so forth. But they've really been looking at optimizing deposit activity. But they are an outlier. If you look at branches in the US, they continue to decline. They declined obviously more rapidly during the pandemic. But we are on track by the end of the decade where the US will have about half the number of branches they had at their peak in 2008, 2009. And if you look at the G20, and this is data from the new book, From Branch They Got Tomorrow, if you look at the G20 and the Eurozone, there's only one country where branch use is increasing, and that is in India. And, there could be an argument made there that's a problem of branch density in India, because they had very low branch density compared with the likes of the UK, EU, and so forth. But even there, it's slowing. China has been flat, since the just before the pandemic now, so we don't expect growth there. But you still have a little bit of legacy behavior in some of these systems. But this is where it's really interesting: is banks like WeBank, which is the largest challenger bank in the world with 450 million customers now out of China, which puts them in the top 3 banks in China in terms of number of customers now. Pretty impressive. But a lot of that growth, and a lot of the growth in Nubank, has come from, previously unbanked people. And this is interesting because these players, Alipay included and so forth, they can court these lower to middle income households, even in markets like China, and still make margin because their operational costs and their cash efficiency is so low. I don't know how you fix that for incumbents, because you've got this entire architecture of the bank that's been built over, in some cases, centuries, that is not oriented towards this, technology efficiency play that, the startups obviously build from the ground up. So given that tech, and particularly AI, is going to play a more important role, I think about the only option is what Chase, and DBS have done, which is use a digital bank format to extend into new markets. But even then, if that is phenomenally successful, and Chase has done pretty well in the UK with, I think, like 2.5 million customers there now.
Yeah, no, they've got like significant market share now.
Yeah. And so, you look at that and you say, well, Chase has done pretty well. But, then how would you apply the lessons that Chase has learned in the UK back in the US? Because they tried it in the US with Fin and it was cannibalizing their business. So they shut it down. So, this is the problem you have with the incumbents. You have this tension between the traditional bank and the new digital play. And the traditional bank methodology or approach seems to win out more, whereas you don't have that conflict with the challengers. They don't have to negotiate this process between the old processes and the old systems and the old metrics. They just get on with it. So in terms of adaptability, this is the key problem. As more technology comes into the play, incumbents, have to really change their entire culture. They have to change their entire tech stack. It's a formidable problem. And obviously, I've been talking about this for at least a decade and a half, and I'm increasingly, it's almost like you just got to start again. But that's not really viable, right?
And you've got the political pressure as well. I just saw HSBC in the UK yesterday announced with great fanfare that they weren't going to close any more branches in 2025 in the UK. A lot of which is bowing to political pressure because branches are closing. You've got, baby movers and older generations that aren't engaged digitally, and suddenly, they're pressuring their local politicians saying, I can't access cash, I can't actually access banking facilities, the high street branches have all closed. So as much as they're trying to move away to a new, more adaptable model, they've got political and regulatory pressure, making sure that they almost they keep these incredibly costly and cumbersome distribution centers called branches. So many challenges. I know Chloe's got some questions on that.
Yeah, no, there's just still a little bit of a need for it. Charlie and I had Steve Weston he's the head of Everyday Money Management at Barclays on the podcast last week actually, and Steve and he's run a neobank out of Australia. He's got great reputation. But he was talking a lot about, the evolution of the branch and it not looking obviously exactly like it used to. And Barclays is doing
that's corporate speak.
A lot of what's that?
It's bank corporate speak, trying to, I mean, I don't think,
But there's an evolution, right? I don't agree with that, Brett, because I think that Steve's put a lot of effort into just looking at the different ways that people need to access their money. And like to Charlie's point there, about there still is a need for different people, different demographics to access their money in different ways. There's still a need for that. I know that you are very much living in the future, and I believe there's obviously a huge place for that. But I
get what you're saying. I get what you're saying, Chloe. But I think
you're probably the only person I disagree with on the podcast, Brett.
Okay, well, let me put it this way. Let me explain it this way. The reason people aren't going to branches as much as they used to is that they just don't have to, because we have these smartphones that give us all this capability, and with AI those capabilities are just going to increase significantly. So this is not a design problem. You can't improve the design of a branch to make it more effective. The only way you can get people still utilizing branches is to take their smartphones away from them, essentially, right? Because this only goes one way. And we haven't even started with the whole personalization drive with AI yet. There's very few applications on that. Once you have a bank account that can cater for your every financial need in real time, responding to your needs in real time through AI, then why would you need to see a human in a branch to sign a piece of paper? It doesn't make a lot of sense. Now, it doesn't mean that there isn't still a role for branches. I do believe in the future that I think it's going to become like a high-end fashion brand. If you use a branch, well, you must be really well off, that sort of thing. Because I think that's the only way the sort of economics of branching will work in the future. I mean, if you look at Nubank, their cost of acquisition of a customer ranges, best in class is sort of around $5 to $7 per acquisition, CAC. WeBank is ridiculous. It's like $0.50, and their overhead cost is like $1 per year. It's just insane how efficient they are. But you look at Chase in the US, and their cost of acquisition is $350 per customer in the branch. So the economics don't work, and I think the market at some point is going to say, branches are an inefficient mechanism. All of, like as I said earlier, all of the fastest growing banks in the world are using this digital scaling methodology. And so, if you look at where that takes us, it takes us into a very different future in terms of the biggest banks in the world are all technology players. So I think, I'm not saying that you need to, drop all branches. I'm just saying if you're focused, if you still have branches and you want to make them part of the proposition, you have to have a mindset change here, which is not that the branch is the primary channel and digital is supporting. That's flipped now. Digital is the primary channel and branches' only role moving forward is to support that mission. Because if you can't succeed as a digital bank, then essentially you're going to get consolidated out.
Yeah, and that's really interesting because our US data is showing that switching has jumped massively by 25% to 1 in 4 US consumers looking to switch. And they're looking to switch for digital services. And then on the flip side, our UK data is showing that when you look at branch usage, the heaviest users of branches in the UK at the moment, and this is, I find extraordinary, are Gen Z and millennials. But when you ask them why you're going to the branch, it's as you say, it's not in order to sign a piece of paper. If the reason they're going to the branch is, can someone explain to me what a credit card is, what a mortgage is, what a savings, like they're going to the branch, but I don't understand financial services.
Exactly.
I need to go to the branch. So the branch already is becoming a de facto support unit to the digital channel.
That makes sense. I'm glad that the data correlates there because that makes sense to me,
If we're talking about advice then, so people are going into the branch for advice, that brings us a little bit onto this robo-advisors and investments decision piece. And Brett, I shared that article with you last night that one of our research directors at RFI wrote. It's a great article and we'll actually add it in the show notes here, all about investment.
Great.
But he's talking about, 40% of consumers in the US trust robo-advisors for investment decisions now. And that comes on to one of the biggest parts of that is education, the need for education. What's your view there on the education piece alongside the robo-advice piece?
So, I mean, you've probably heard me talk about this previously, Chloe, but the misnomer is advice. So when you go into a bank, you don't actually get advice about how to, optimize your finances unless you're seeing a financial planner specifically for that. But even then, the advice you're getting at a bank is which product they want you to buy, right? Or which product they're trying to fit to your circumstances. So it's not true advice, because the true advice may be, well, you need to do this, and you need to do things that are outside of the realm of the bank, to be more financially healthier, for example. But they're not going to say that. They're going to say, oh, you need to invest in, these mutual funds or, this asset class or that asset class, rather than, advice that gets you financially healthier in the medium term. In fact, if you look at sort of the core function of banks today, particularly when it comes to the use of credit over the last 40, 50 years, banks have been much more geared towards trying to get people to spend money and take as much credit as possible, because that's where banks make margin. So, just that alone means that banks they're really conflicted in terms of advice, because they're trying to make, product margin, and the advice reflects that. So I don't think that the advice component that you get from the bank, as we go real time and we have those functions of banking embedded, the core utility, the ability to save money, the ability to move money, and the ability to access credit, as those things become more automated with technology, then the product differentiation that banks have sought tends to disappear, because it just comes back to that pure utility and getting access to that core banking utility when and where you need it. That's why wallets today, there are more wallets in the world, mobile wallets, than there are bank accounts from traditional banks. That's already happened, so so people want that sort of contextual advice rather than product advice. And that's where I think the technology shift is going to take us. What is then left in the branch? Essentially, you go into a branch in 5 years' time, and it's like, my bank thing isn't working. Can you help me fix it? And how many tellers relationship managers in a branch today have the technical capability to address those sorts of problems. So I think that what we think of as advice is in banking is not really advice. And I think that the context of where that's important is going to change. It's going to move to real time.
Mm.
But that's, I mean, that, I'm a technologist, so I'm a little biased. I admit that, right?
I just want to move out of the branch for 1 second into some other channels. So a few months ago, we were talking to Mohammed Karain. He's the global head of digital banking for Standard Chartered, who obviously have a very strong Asian and Middle East footprint on the consumer side. And he was talking about the need and I know you've discussed this, we've discussed this previously, the need to bring banking to the consumer, not to make the consumer come to the bank, to be present in whatever channel they were, and how banks need to be a chat-first institution. Now, if we just kind of step back at a global level and look at some of the really significant regional differences, that's easy if you're running a bank with a predominantly Asian footprint, because we know that 60%, according to RFI data, of Asians are really interested in the idea of a super app. However, that percentage of even the concept of a super app, but the idea of merging banking and non-banking functions in one app, that drops off rapidly when you go across to some of the Western markets, particularly the UK and the US. The UK, less than 3% of consumers are comfortable with that idea, around fears of security. So, if you're in the UK, you're in the US, you've got these very, very deeply embedded fears around security if your banking app and your non-banking functions are included in one, which is to do with all the fraud and cybersecurity issues which are raging at the moment in many markets. How do you as a bank start overcoming some of those challenges? Because it's one thing to say we need to move away from branches and they need to be support channels, and we need to move to chat first institutions. But if you're not in Asia and you're not in emerging markets, if you're in the US, how do you drag customers across to those channels?
Well, I mean, you got to demonstrate capability, and Revolut and Monzo and Starling and Nubank have done that. They've demonstrated better experience capability, and that's what initially got them, I think, the traction. And then they use social and community very effectively. The cross-border transfer stuff for Revolut, obviously, and Wise has been phenomenally successful in getting people on board. But it's what's interesting is, what's the super app version of a bank in the future? I would say it's a super wallet, right? And I'd say that our wallets are going to extend well beyond just a value store. I think, we're going to have our DNA health data in there. We're going to have data that we might trade. For example, purchases we've made, we might sell that data to a merchant to get better deals. We might sell our health data from our, sensor suite, like our Apple Watch or whatever that might use, to an insurance company to get better rates. I do see that a super wallet type function is probably, especially with AI, going to become something that most people will use in, sort of the smart economies of the future over the next 10 or 20 years. But in terms of what's happening in the UK, particularly with millennials and the Gen Zs and so forth, is that they tend to think about banking like they think about apps. It's a very good analogy. So they don't have one app that does everything, like a super app in the UK. They pick and choose the right app for the right function, and I think that that's how the millennials think about banking as well. I don't think they think of a one-stop shop for all of their banking needs. I think they think about it like the app ecosystem is. Oh, I need to send some money. What's the app for that? They don't even think, if they're a customer of Lloyd's or HSBC, they don't necessarily think about using Lloyd's or HSBC for that. It just sort of doesn't really enter into their mind. So this sort of primary financial relationship thing that we used to push in the 90s and the noughties, I think it's a primary digital relationship that's emerging for at least for financial wellness and sort of an overall picture of your financial health, and then you pick and choose the utility underneath that. So it's similar to the sort of super app strategy that we see, but it's not necessarily in a single app. It's just still they're using bite-sized functionality. And that's going to be even more the case when it's AI, because we're not really going to have apps when we have AI and, say, augmented reality. It's going to be these chunks of functionality that are highly contextual. And so, the way we deliver this functionality itself is going to move away from apps because of AI as well. So that's sort of a bit of a more futurist conversation about experience platforms and so forth. But that's sort of my general view.
It's all just how these generations operate and work, though, isn't it? Like I'm just picturing zipping about between apps. Like, let's take social media, for example. I'm quite a fan of that, Brett. I know you are too. I mean, how quickly do I go between all of my social media apps? And I don't put exactly the same thing on every single one of those apps. And I don't even think about it. It's just inherently happens. I know what I want to be perhaps a little bit more public than others. This is making me think again about another episode of Banking Uncovered when I spoke with Dave Birch, and Charles is across this convo as well. But this whole digital wallet, I mean, he'd be all over this conversation and would 100%.
Oh, of course.
Exactly.
We talk. We do. Dave and I've done the talking head thing on stage together a few times on this, and the fastest growing bank account in the world is a wallet. It's not a debit card. It's not a plastic card. So one of the questions, so next year, this is data from WorldPay and Juniper. So if you look at 2025, 2026, we're looking at 55 to 60% of all retail commerce going through mobile wallets. And these are not tokenized wallets. Tokenized cards and plastic cards will represent about 30% of all retail commerce globally. And then cash goes down to about 10%. And if you look at that, that's really telling, because by 2026, essentially mobile wallets will account for twice of the day-to-day commerce activity compared with a traditional bank artifact. So that's the reality. Like, this behavior has already shifted globally. The US and the UK with the card schemes tends to be a little slower because of those entrenched systems. But if I was in the card business right now, I'd be terrified, because, the whole basis of that business on interchange has got to be under threat from these other systems that are emerging.
I mean, I doubt my kids are ever going to have a card, are they?
Right.
They're 3 and 5. That'll be something that, we show them down the track and they'll go, "What's that, Mum? Look at that."
You mean you used to drive cars yourself?
Yeah.
Wasn't that dangerous? Yeah. Like, this is it. It's a behavioral shift, right?
Absolutely.
I'm not so sure. I'm not so sure. And this is like literally just last night. I have 4 teenage boys, which frankly is exhausting and means that every dinner is a full-on war over some topic. And last night, the full-on war was because one of them had got, I'm going to name the bank, an HSBC card. And the other two of the others have Monzo. So they would argue over spilt milk, but they were arguing over
You should have
which is
recorded
better,
that. You should
Monzo
have
or
played it on the
HSBC.
podcast, dude.
We should get that on the podcast. That's a great idea.
But literally, they were arguing over Monzo versus HSBC, and this does this, this does this, and there was no differentiation. Everything that Monzo did from an experience point of view, my son who has HSBC said, I could do that, and at the end of it, it came down to, this is a card and it looks really cool and sophisticated.
Right.
Your Monzo card does not, and it was just a kind of brand argument it turned into. But it was just really interesting listening to it, because it's like, okay, so if the big banks are going to start delivering digital wallets that are as seamless and real time as the neobanks and the challengers and the fintechs, is it going to be the integration of AI that's the next kind of differentiator? Is because we've really only touched the surface with generative AI and what it can do from a customer experience, what it can do from a compliance, what it can do from fraud and cybersecurity. Is that going to be the thing that differentiates the banks going forward? Who is better at integrating and adapting AI as it develops?
Well, yeah, absolutely. I mean, AI, this is the key point is, if you think about this dynamic and what's happening, if you look at just the data on mobile wallets, then there's a fairly obvious question that comes out of that, which is, and I ask CEOs of banks this whenever I meet with their boards, and I say, have you got a program to sunset credit cards and debit cards from the business? And they think that's a crazy assertion, right? But it's like saying to someone, have you got a plan to get off dial-up and get onto broadband internet? I mean, like, it's obvious that has to happen given the trajectory we're facing. And so, in respect to who is well placed as a a banking utility provider to adapt to AI, that's largely a technical question, right? Does the tech stack allow them that flexibility and agility to incorporate artificial intelligence? Can you easily get access to data to mine for generative AI in the banking space? And this is, it'd have to be specific models for banking, maybe multimodal models. You're not going to use ChatGPT for generative banking. But you look at that and it's largely a technical problem. So which organizations are going to be best placed in terms of technical agility to adapt to the era of artificial intelligence? The answer is pretty obvious. And your asset size and your ROE have absolutely no bearing on your ability to integrate artificial intelligence well into the stack. It's all about your culture, technical agility, and your existing tech stack.
And is it going to be? I'm going to reference another book here. So Gary Kasparov, obviously, the ex Grandmaster, wrote a very interesting book on AI. And his argument was, yes, he lost to Deep Blue, but very famously in '97.
The guy's been trying to live that down ever since, right?
He has, yeah. But the one of the premises in the book is that if you take an average chess player and you take an average computer, they will beat Deep Blue every time, because it's that combination of the human and the analytical speed and processing that is an unbeatable combination. And if you take that as a loose analogy, and you look at the future of banking, you go, okay, the existing banks, the incumbents, they've got some challenges, but they do have regulatory compliance, they do have security, they do have trust. You've got the fintechs, they've got the ability to digitally scale, the ability to integrate AI. Are the winners going to be the traditional banks that can partner with the right fintechs to provide a comprehensive 360-degree experience? Are they going to be able to beat the standalone fintechs and the standalone traditional banks? Is that in the Western markets? I'm not talking about some of the Asian and emerging markets, but is that a model that you see as a viable playing out for some of those traditional banks?
I mean, absolutely. If you want to do wallet integration, you're going to have to, as a bank, you're going to have to be a partner with a fintech, right? So I think that we used to, when we're selling Moven to banks, when we started the B2B business for Moven, we would say we bend space and time. We can do this faster and cheaper than you'll ever be able to do it internally. But it's tough to get a fintech and a bank working together from a cultural perspective, Like, I know the biggest problem we had as a fintech working with banks was not the technology stuff. When we did our partnership with TD Bank, and that was still very early in the day with our tech, it took us like 4 months to do the original proof of concept in at TD, building out the companion app, as we called it. And it took us 9 months to get through procurement.
Yeah.
And that's sort of an illustration of the functional challenges, for what you described. But if banks are smart, then they will try and say, the best way or the quickest way for us to do this is with technology partnerships where, there's already some good platforms in place. And, you've got the big players like the Apples and the Alibabas and so Amazons and so forth in the world. But you've got to be pretty early to get partnerships with those guys, because once they've established partnerships with some of the major players, they're not going to necessarily really need other banks, play in that mix. Apple obviously launched their own Apple Card. That was, from an Apple savings perspective, that was successful, but not so successful for Goldman Sachs, it appears. So I don't sort of know what's going to happen there. But I do think that you're going to see this hybrid environment, as you said, Charles, that emerges with fintechs and banks having to cooperate, because it is, the banking sector that is emerging, in the 21st century is really sort of technology, architecture, and infrastructure in the economy. And especially when you start talking about agency-based AI, when, for example, I talk to my smartphone and I say, hey, not going to call it SIRI because it'll respond, but let's say I rename my smart assistant as Alfred, like out of Batman. Hey, Alfred, send Charlie $50, right? AI agency, that's going to be with us very quickly. And in that environment, as you start building out the agency model, the really interesting opportunity is smart contracts, automating business and the functional elements of finance from a banking perspective, automating that. And that requires entirely new infrastructure. Existing core systems won't support smart contracts. Even US dollar won't be supported on smart contracts. You'll have to use tokens or something. So the infrastructure that is emerging for what is next in banking, essentially none of the lessons we've really learned in traditional banking are of much help in this era that we're moving into, unfortunately.
We're almost out of time, but there's one last question from me, and I'll back to Chloe. So you mentioned business there, and this is something I think that's really interesting. Whenever we talk about banking, about fintechs, we're always focused on the consumer. So always consumer banking. And yes, there are pain points for consumers. There are friction points that need to be solved. And, cross-border transactions, as you say, Wise, Revolut, they've really solved the friction and the expenses there. But whenever we look at the data, one of the most exciting opportunities is small businesses. If you're launching a small business now, the array of products and services that you can get from fintechs and digital-only providers is light and day compared to 15 years ago. And small businesses are they're the generators of economies. There's no doubt about that. And so I think small businesses represent 97% of all the businesses globally. So there's obviously some really, really exciting stuff happening there with AI, with partnerships. Is there anything really amazing that you're seeing in some of the markets where you're seeing people really at the forefront of digital evolution that's happening in that small business space that you think is going to cross over into some of the more traditional Western markets?
So one of the really interesting, and I'm going to refer to China, and people think I'm a shill for China because I talk about the good things that are happening in China, but they're really, a next level advanced economy, and we're going to see that more and more over the next few years. But Ali Pay combined with My Bank, which is the 10 cents, not 10 cents, Alibaba, Alipay's bank there. Tencent has WeBank. But My Bank and Alipay do about 40% of SME lending in China now. And their NPL ratios for that segment are half that of ICBC, Bank of Communications, Agricultural Bank, and so forth. Half of the best banks in the world. So why is their credit risk management so good? You could argue it's a data set, advantage or a technology advantage, but it's really just simply cash flow analytics, because they're, those 40 million or 40% of SMEs, about 56 million businesses they lent to in 2022. Those are generally on one of the Alibaba platforms for merchants as a merchant. So they've got all the cash flow data already, and cash flow is, makes assessment of, credit levels and managing credit much easier than going to collect 3 years of financial statements from a small business and trying to analyze them. So really, that's where I think from a business perspective, it starts with being embedded in the business as a banking function. And sort of then the next piece is enabling those businesses to grow and helping them understand the dynamic of their business and so forth. So I think that's all. It all comes down to data, and that's why you see the likes of My Bank and Alipay being so successful in this segment, in that space. And when you go to the agency model, as I said, with AI, trying to automate business for an SME, as you said, payroll, HR functions, all of those things can be in the stack now. It just makes sense that banking is going to be as automated as possible in that environment.
You wrote a pretty interesting article, Brett, that I just want to raise. I think it just was published yesterday, and I read it last night. We're all in this together, but we're not article. People should check that out. I'm going to pop that in the show notes as well. Can you just reveal a little bit to the audience of this podcast what you were chatting about there? And you made a really interesting point about recently in a presidential debate in the US, AI just wasn't even mentioned. And this is quite shocking to you. It's disappointing to you. Just a little bit on that, and when you think that's really going to get the attention of those markets that need it.
So if you were to categorize the debate on artificial intelligence right now, particularly in the United States, you've got really the sort of big debate is, will it or won't it? Will AI become sentient? Will we get to artificial general intelligence? Will it really take jobs away from us? And we do this as humans. We debate is climate change really happening? Is it really going to be as bad as they say? And by the time we recognize that it is that bad,
it's too late.
It's too late, right?
Yeah.
And so this is very much a human, the human condition. We tend to, like, why aren't we putting the effort that we're putting into debating whether AI is going to happen into preparing for AI in our society? Because it is going to be disruptive. It's going to change the way we work. It's going to change a lot about what we think about privacy and so forth. This is all going to happen fairly quickly. Sam Altman and, the techno-feudalists, behind Silicon Valley and so forth. Sam Altman's making a bet with his friends right now, and I put this in the article, who's going to be the first one-person unicorn. That's $1 billion company run by one individual. So this is how Silicon Valley thinks about the use of artificial intelligence. It's going to eliminate human labor from the workforce. And that has, frankly, always been the intent of the market when it comes to either software automation, in this case, AI, and certainly, with the production line, and so forth that we've seen. So that's the intent of the market. So why aren't we preparing for technology-based unemployment, and or figuring out where we want AI to be applied and where we don't want it to be applied and so forth? We're just not having those mature conversations. And I would think it would be the first thing. Well, second thing, because the first thing I think the presidential candidates should be talking about is climate change. But the reality is that the free market just doesn't have solutions to these problems. And that's why it's not being talked about. So we need a change in philosophy as a species to really handle these big problems. I know that's not, that's sort of not quite, Charles, in terms of the banking industry stuff. It's really sort of more talking about human philosophy, capitalism, and our economic systems. But I think we're, AI and quantum in particular give us as a human species the ability to take it to the next level, but we have to divorce ourselves from these old thinkings and philosophies that have emerged over the last 300 years. We've got to take it to the next level.
It's really interesting. I went to a talk by him in London about 7 months ago, and he was asked a question from the audience, what degrees will be valuable in the future? And he said a degree in philosophy.
Yeah.
He said they've already got 40 people with degrees in philosophy, and it's one of their fastest growing areas of employment. And he said the important thing is not what can we do, but what should we morally and ethically do, and what are the implications of that, which is 15, 20 years ago, getting into a philosophy degree was like theology. It was the back door into a smart university because no one else was applying for it. And it's a really fundamental shift in how you think about things when you're employing people for philosophical abilities rather than technical or analytical or management abilities.
But we are a futurist? Isn't it a futurist a philosopher?
It is, but can I give you one last perspective for your listeners? And this is something that I think is, it sort of blew my mind when I found out about this. In 1972, MIT and the Club of Rome did a study. The Club of Rome was sort of like a precursor to, the CFR in the States, right? But in 1972, they did this study, and it's called Limits to Growth. I'm sure you've heard of it. And they concluded that the system would collapse in about 2040, our current system of economics, because as more and more automation comes into the economy, the ability to convert raw materials and into production becomes infinitely scalable. So when you have infinite growth possible on a finite planet, you run into a collapse, right? And so this is really, we're already experiencing this right now with climate, but it's going to accelerate with the use of artificial intelligence and, certainly going to accelerate sort of technology, unemployment and so forth. We need a new philosophy. In 2020, KPMG, Volkswagen commissioned KPMG to do a study on the Club of Rome model and to see if it still worked. And KPMG said it was bang on, in terms of the model, in terms of where it's likely to go. So that's the time frame we're talking about, where philosophically we have to have these changes, these shifts in thinking.
That actually coincides with, I've just figured it out, that coincides with my potential retirement.
There you go.
2040, I reckon I'll be about 60. Interesting, scary. Better have some money in the bank.
Yeah. Well, why do you think Peter Thiel and Mark Zuckerberg are building these bunkers?
Yeah.
I don't know, but
Thanks, Brett.
Fantastic. We're completely out of time.
right,
So
great.
thank you very much for sharing these thoughts on banking and AI and all things futurist. It was, as I'm sure Chloe will agree, as usual, fun and interesting and enlightening chatting to you. So thanks very much. And yeah, look forward to talking again soon and on reading your new book when it comes out. That'd be fantastic. Look forward to that. And a very topical subject, the future or non-future of branches. So Brett King, thank you very much for joining us.
Thanks.